Welcome back to the Security Token Show interviews. This week we have Nick Carmi, VP of Institutional Markets at Figure Markets. Nick, how are you today?
I'm doing great. Thank you very much, Jason, for having me on your show. I greatly appreciate it.
Oh, my pleasure. Thanks for coming on. We have a lot of news that's come out of Figure recently in the last few months, but the one of the more exciting ones is your YLDS yields publicly registered yield generating stablecoin here that you guys have, or Yieldcoins as we call them here. But tell us a little bit about what this product is really. And I do want to dive into a question, but tell us real quick in a couple sentences, what is the YLDS product?
Yeah, I mean, it's been a 3-year journey for Figure Markets to get this done. And finally, we're here. If you think about yields, what is yields? I mean, yields is an interest-bearing stablecoin that functions as a fixed income security, right? It's based off a security called a certificate that's been around for many, many years. The beauty of certificates is that they're peer-to-peer transferable. Why did we create yield? Why did we start yields? We wanted to create a stable coin that is regulated under as a security, but also that pays interest to the holders. Currently, if you hold YLDS, you receive SOFR, which is the bank and the interbank rate minus 50 basis points, which is a lot better than holding any other stable coins, which yields you 0. And that's the other key feature of yield YLDS as a security that distinguishes itself from money market funds or other funds that generate yield is that yield is peer-to-peer transferable. That's the beauty of the certificate.
Got it. So, and that actually kind of leads into one of my questions, which is there's a lot of structures we've seen in yield generating assets, yield coins. We've seen 40 Act funds, private placements. What really drove your decision to go full registration? Because as you mentioned, it is a long process. I'm just curious to see what other factors were built into that.
I mean, I wasn't here to go into exactly why Mike Cagney and the Figure team wanted to do this, but I can assure you it had to do with, hey, we want to create a stable coin that is regulated, and we wanted to create a stable coin that will reward the clients back in the form of interest. If you hold any stable coin, that exists in the market right now, you will earn 0 on it. You would have to take that stable coin and go invest it by buying cryptocurrencies or lending it out and earning a yield. So there is risk inherent in you holding other stable coins. Our YLDS will automatically give you interest on a monthly basis. It's the one thing that we believe in, and you would hear this time and again from Mike Cagney. He any interview you see with Mike, truth over trust, right? It's you trust the other stable coins about what you're doing, right? With yield, it's the truth because it's regulated and we have to comply with it.
Got it. And another note on that one though is we've seen other assets that are transferable and they pay 4 to 5%. Meanwhile, we see that yields right now is at around 3.82%. So why would an investor buy into this specific product? I want to learn more about the differentiator here.
Yeah, look, the other products are not transferable. The other tokenized money market products are not transferable. Remember, there is a money market fund that exists, and somebody created a digital token of it. And you invest $1 in the digital token, somebody takes that $1 and invests it into the money market fund. There is that extra hop. When you own that tokenized money market fund, right, you still have to go back to the issuing party. So if you own, it might be securitized, you might have to go to this transfer agent or Oasis Pro. It depends on who is managing the tokenized money market funds. With ours, it's a true peer-to-peer transfer. It's a security. It's the first digital security of its kind, right? There's no exchange for it. It's not like there's no CUSIP for it. If you're familiar with securities in the TradFi, every security have a CUSIP associated with it. Ours doesn't have any of the above, and that makes a big difference. If you're holding a tokenized money market fund, you can go and buy coffee with it. You'll hear Mike Cagney say that all the time. If you're holding YLDS, you should be able to go and buy coffee with it, as long as the Starbucks or whoever, 7-Eleven or whoever it is, can actually accept yield into the infrastructure, which they should be able to.
Got it. Yeah. Other things we've seen.
And the other thing I want to add,
Sure.
the other important thing, yield doesn't have a minimum, right? Some of the other tokenized money market funds, they have minimum investment criteria. We don't have a minimum. You can buy $5, $20, $100, $1 million, whatever you want. There's no minimums. That's another beauty, and it's available globally to everybody. Some of the tokenized money market funds that exist are not available to U.S. investors. They're only available to offshore investors, or vice versa. Yield is available to everybody.
Got it. We've seen, Benji, that's peer-to-peer transferable. We've seen WisdomTree try with their card, right? Their debit card that is kind of linked to your tokenized assets. It sounds like Yields is trying to be a little bit more native and cut out some steps.
Absolutely.
Here. So I do want to transfer over to other questions here. Obviously, as you mentioned, it took 3 years to do this. What were some of the biggest challenges or takeaways from a regulatory perspective to get this approved?
Look, I mean, again, I wasn't part of that journey, but having dealt with the SEC and the regulators in the past, every time you go to the regulator with a new product, right, especially a product within the digital asset space, right, I don't want to say it's a challenge, but it's a journey. You got to spend a lot of time with the regulator, explaining them why we're doing this, what's going to happen, how it's going to work. They need to understand it. They need to understand the risk inherent with it. What does it mean for the investors? What does it mean for the people? And whether it's an institutional investor or a two-legged investor. And again, don't forget, with last year and the years before, the regulators were not as, I would say, as friendly or as friendly within the digital asset space. So that's what I think we're able to push this through. Again, the product is very different from everything else, and it's a quality product. It works the way it's supposed to work. Yes, the yield might be small, might be less than what you currently earn on a money market fund. But if you go to 4 or 5 years ago, money market funds were earning 2% and 1%. So that's a difference. I mean, I think SOFR minus 50 is a very good number if you compare it. We're thinking long term, and also you can use it for anything you want.
Got it. Quick follow up on that, and then I do want to ask a little bit more on the regulatory side. But as conditions are changing in the markets, how do you think the next 6 months, for example, will go in markets, and how is that going to affect the SOFR and yield generating aspect of yields?
I mean, are you talking markets in general, financial services, and digital assets, or one or the other?
I mean, overall, right? Whatever is.
Yeah, I mean, look, rates. I mean, the idea is that rates are going to continue going down, right? I mean, it's like 6 months ago, you were able to buy treasury bills, short-term treasury bills at 5.25, and now you're at 4.25, and they're going to continue going down. If I look at the 10 years is yielding 4.3, 4.5%, I think, but it's not trading at par. It's trading at 102, so it's trading above par. So there is a view that rates are going to go down, and if you hear the new administration, they're definitely pushing for that to happen. On the digital asset space, I think this is the year when digital assets are going to explode, and it's going to be a phenomenal year, as been evident since coming into this year from last year. There is a lot of positivity going on in the market. A lot of people are doing great things. Clients coming in. I can tell you, a lot of my friends that for years were like, "What are you doing in digital assets? What's Bitcoin? What's Ethereum? What are you doing now at Figure Markets?" They're like, "Hey, how do we get in?" Right? There is a lot more interest. I mean, you have ETFs now. Who would have thought that we're going to have Bitcoin and Ethereum ETFs? Right? I mean, that's incredible. So I think, look, rates could go down. That's okay. Our intention with yields is not only to be able to pay back the holders an interest rate, but also to allow them to benefit from having a stable coin-like security product that they can earn something on it while they are transacting with it. Like
Got
none
it.
of the other stable coins do this, and that to me is a very powerful thing.
I appreciate that. I'm going to pause here. For anyone watching on the Security Token Show, we are going to move on to the next section of the show. But if you want to watch the rest of this interview, it'll be on STM TV on YouTube over at STM TV Official. With that, Nick, I do want to ask, moving on to other subjects on the, tell us a little bit about the forward vaults. That's something that we've seen on the figure markets as well. We saw a higher yield on that one, 8%, but I want to learn more about,
it's a
what
great
exactly
product. It's a great product. And it's, if you think a forward vault, it's a yield bearing product that you can invest into it and earn 8%. Right. What it is, it's a fund that's backed by real world assets like home equity loans. So basically you invest in the fund, and the money that's invested in the fund is actually being lent out to generate home equity loans. This is why you're able to get 8% on it. It's a secured product because it's backed by real world assets. And we're seeing, again, if you think about the way figure markets and Mike Cagney has been thinking about this, we're building a toolbox with different tools for our clients to benefit from. Like if you want to invest and you want to earn 8%, we got a product for you, and it's secured. It's a fund, and you can earn 8%. But when you invest in our forward vault, you can't take it anywhere, right? There's one thing you can do with it though, is if you invest $100,000 in forward vault, you can use the equity that you own in the fund as collateral to trade on our exchange, which is the thesis behind what figure market is. So you can use, if you're holding yields and you're holding it on our exchange, you can use yields to get leverage and trade on the exchange. If you're holding forward vault and you're interested to use forward vault as collateral to get leverage and trade on our exchange, you could do that as well. And eventually everything else we do, we have a real estate investment fund, trust, we have a REIT. It's going to be available on our ATS. If you own the REIT and you want to, if let's say you own Bitcoin, right? And you deposit the Bitcoin in your wallet on figure markets, you can take leverage on the Bitcoin, take the money and go buy our REIT. Like the REIT is generating right now about 16%, right? But again, you can't take the REIT and go buy coffee with it. Right. That's the primary difference, and you would definitely hear Mike Cagney talk about buying the coffee with yield, because I think it resonates with a lot of people that, hey, I can take yield, I can hold it in my wallet while I'm earning interest, but at one point in time I can go buy with it coffee. I can hold a stable coin in my wallet, but I'm not earning anything on it.
And this combines the two.
Yeah.
Got it. So tell me a little bit more about what you think the future of vaults in the RWA space is going to look like, and how DeFi kind of fits into the picture here long term.
You mean forward vault?
Forward vaults, or just vaults in general in the RWA space?
Yeah, I mean, look, DeFi, we are exploring ways, for example, to make yields available on DeFi. And I can't talk too much about this because we're still in the weeds of thing. That to us is very important, because now you can think of yield as you're already, look at it this way, like the biggest, like if you go to transact, whether it's on DeFi or to do a derivatives product where you have to post collateral. Right? If I post dollars, or I post stable coins as collateral, or I post Bitcoin as collateral, and the transaction itself is costing me 8%, right? I'm not only paying 8%, but I'm losing out on the benefits of the collateral that I'm posting. Because if I'm posting dollars, I'm earning zero on it. But if I post yields as collateral, right? My cost of funding is 8%. I'm earning 4% on the yield from the interest. Right, then my cost of funding for the transaction itself went from 8 to 4, right? And that's how we look at the world when we think about yield. That yield is another form to allow you to lower your cost of funding, because it's not like you're holding dollars and you're just putting the dollars somewhere. You're holding dollars and you're earning interest on them every day.
Got it. Got it. No, I appreciate that. Awesome, Nick. Well, it was great having you on the show. Thank you so much for coming on. I do want to ask though. I know that's separate from Figure Markets. You guys have but Figure, also has a relationship now with Sixth Street, and you guys are doing a JV there. If you can just tell us a little bit about what you think that's going to differentiate for capital markets, because I know they're investing quite a bit of money into it.
Yeah, I mean, look, Figure has been around for 5 years, I think, if I'm not mistaken. And apologies if I'm off on that date, 4 or 5 years. We've done billions of dollars worth of transactions on chain, and we're very big in the home equity loan. We're transacting with TBAs. They're looking to launch a TBA market, and which we're very big, which we're very huge, right, on the blockchain. We're going to continue building on that thesis. I think what we do with Figure as well as Provenance on the blockchain side is phenomenal.
Absolutely. Well, thank you so much, Nick. I appreciate the time. Anyone watching, of course, forward this to anyone that could be of interest in an interview like this. But Nick, appreciate it once again. Thank you.
Thank you very much, Jason. Have a good day. Thank you.
Likewise. Thanks.